It's January 6th. JLD here, and welcome to MSTR Today in the Treasury Titans. What is Michael Saylor doing walking down this road? I don't know, and I'm not going to comment on it, but I do know that nothing in this video is financial advice. We are just here celebrating Michael Saylor, celebrating Fong Lee, celebrating the strategy team and everything that they're doing. It is just a wonder to behold. What exactly is that wonder? Well, let's go ahead and check things out over here because Michael Saylor just posted the strategy has acquired 1,287 Bitcoin, increases Bitcoin reserve to 673,783 to become, and has increased its USD reserve by 62 million to 2.25 billion. Money sign MSTR. I will say that I was correct that they went both with the orange and the green. I thought they're going to do a little bit more green. 62 million is a good chunk of money, obviously. I was thinking they were going to get up to 36 months total, but they just push it just about out to 33 months. So they still got a little ways to go before they can claim 3 years of reserves. But adding 1,287 Bitcoin during a holiday week is pretty incredible. So hats off to strategy, hats off to the team. They never stop working. They just execute relentlessly. And Hugh says, "This is my quant. I've protected his identity, excuse me, because there is no second best quant." And I'm glad that he protected the identity of this because how would I ever have guessed who his quant is? Adam says, "This is the best entry point I've ever seen for MSTR. MNAV is 1.03. For just a 3% premium, you can buy 26% amplified Bitcoin exposure and have Giga Chad Saylor increase your Bitcoin exposure over time with Bitcoin yield increase. ATM for Stretch is about to fire all week, leading to a potentially big Bitcoin buy next week. This is why I bought more this morning. No brainer." And I agree. It's an absolute no-brainer. Chris says, outside of all tail risk events, MSTR is going to 10 trillion and beyond. I wrote timeline. Let's see. Did he respond to my timeline? 20 years, says this person. And I wrote Tina, which he then replied, Tina, question mark. And I wrote, there is no alternative. Adam says 60 billion of Bitcoin is growing at 30% for a decade is 827 billion. That's a 13.8x multiplier before you layer on the multiplicative effects. Saylor is going to be one rich man, and anybody who's listening to this right now who holds anything over 100 shares of MSTR, you are also, in my opinion, going to be one very rich man or woman. So congratulations. And Zinc says, the thing is, it sounds ridiculous, but the maths is the maths. This is why the normies think we're all scammers, LOL. It's almost too good to be true, but it's just math. Chris has a pretty great post here, so buckle in for this one. People that compare Bitcoin treasury companies to strategy still don't understand that its success between 2020 and 2024 was defined by a unique set of factors and landscape that will never be replicated again. One, before adopting Bitcoin, strategy was a billion-dollar company with an operating business that was generating $50 million of cash a year. Two, until the introduction of the ETFs in January of 2024, strategy was the only way for the average person / investor to gain passive exposure to Bitcoin. Three, until 2025, strategy was the only way for the average investor to gain leveraged exposure to Bitcoin. Four, strategy was issuing a multiple billion-dollar zero coupon unsecured convertible notes at 50% conversion premiums. Five, strategy was issuing convertible bonds during a time when Bitcoin appreciated significantly. This meant that as the price of Bitcoin increased, strategy's leverage ratio decreased, which enabled them to enter the market and issue more converts, creating a positive flywheel effect. Six, strategy has Michael Saylor. Few people, if any, truly understand Bitcoin as well as he does. For many reasons, including those aforementioned, strategy has benefited disproportionately from the broader positive sentiment around Bitcoin. This is not to say there won't be winners. Of course there will be. But for all intents and purposes, no matter how you twist it, strategy is an anomaly. Period. End of story. And on that note, British Hodl says, strategy will hold 1 million Bitcoin before Bitcoin hits $1 million. So think about that. Strategy is going to hold 1 million Bitcoin. They're like, what is it? Like 330-ish thousand away from that. So just like another good year, maybe another good year or two, and they'll be at 1 million. I think 2 years at the tops, they'll be at 1 million Bitcoin. And then guess what? Bitcoin's going to $1 million. Like we all know that understand and believe in Bitcoin, that Bitcoin is going to $1 million or $0. It's going to $10 million or $0. It's going higher than that or $0. And none of us believe it's going to $0. So imagine Strategy holding 1 million Bitcoin and Bitcoin being $1 million. Like just imagine that and then know that it's going to be true. Zink says, calling it now. This is my bet. The best performing asset in 2026 will be Bitcoin. The best performing equity in 2026 will be a Bitcoin treasury company. MSTR will outperform every stock in the S&P 500, expecting the same in the UK, Japan, and Europe. I'm bullish with a Bitcoin capital B. Adam says, Metaplanet at $3.09, a 10% premium to Navis here. Still think 10% premium is incredibly cheap. Why? What premium do you designate the company when equity when you issue digital credit that pays out a 4.9% in a rapidly depreciating currency to buy a finite asset that appreciates at 20 to 40% CAGR for the next decade? The added Bitcoin per share from this preferred issuance model seems like it will drastically outpace the 10% premium you pay for amplified Bitcoin performance very quickly. The valuation of this volatility beast will be extremely fun to watch over the course of 2026. Giga bullish as always, onward. And you know that this is MSTR Today and the Treasury Titans. And right now that Titan of Metaplanet is absolutely rocking. And as Adam says, Metaplanet is up 9% after its amazing 19% day yesterday. Volatility is a gift to the faithful. So by the way, you're listening to this. The market hasn't opened, but we're expecting another like 7 to 10% update for Metaplanet. So we will see what happens on January 6th, but that's the expectation. Zink says Metaplanet success continued in Tokyo. It's now at 27% in 1 month. Real potential for the stock to be the best performing in the world this year, like 2024. If Bitcoin goes to 200K and the company's able to reach its goal of accumulating 100K, then why not? Looking like we're making a move here. And we have a great video clip of Michael Saylor. So sit back, relax, and enjoy.
So the liquidity in these things has gone from 70 million to 180 million in a few weeks. And let me try to illustrate this a different way. The preferred stock market has normally been a garbage market. Most of these securities are garbage. That they go into a portfolio and people wait to die. They're sold via 144A transactions, which means that it's illegal for the public to buy them unless you're a qualified investor. When they're sold that way, they trade 100,000 a day with a bid-ask spread that might be 300 basis points wide. If you take one public, they trade 1 million a day. The first set of digital credit instruments we created traded 20 million, 20x that. And then when we finally got it right with Stretch, it trades 100x that. And this is 12 weeks old. So our goal here is to get this to 1 billion a day. And it's a chicken and the egg thing. Like, why would I want to trade it? Well, you know, if it's a heterogeneous, low-yielding instrument, there's no reason to buy it. There's no reason to trade it. Because these are perpetual, they're going to last forever. That meant that we could put a shelf registration on them, and we could grow the AUM in the same way that you might grow a proprietary credit ETF. And that was always our vision for this. Now, we discovered that putting Bitcoin together with preferred stock, together with an IPO, together with a shelf registration was an innovation. But then we tripped over this next point, which is we discovered that all the dividends that we pay out are tax-free for you, right? Tax deferred, technically. Basically, the bug was, oh, you're funding the dividends by selling equity, and you don't have cash flows to fund the dividends. Well, the fact that we fund the dividends with equity means that it's return of capital, which means that all the dividends become tax deferred. And that means that you don't pay New York City tax, you don't pay New York State tax, you don't pay federal tax. You just get the dividend, and the basis in the instrument is reduced. And so a ROC dividend is 0% effective tax rate until your basis goes to zero. then it becomes like a qualified dividend, which is a long-term capital gains tax. And what it isn't is interest income, which is what every bond would be and every money market or every bank credit instrument would be.
When you want more for your business, start with Northwest Registered Agent and get access to thousands of free guides, tools, and legal forms to help you launch and protect your business all in one place. Build your complete business identity with Northwest today. Your business identity is more than your logo or website. It's everything that defines who you are and how you operate, from what your customers see to what they don't, like operating agreements, meeting minutes, and compliance paperwork. With Northwest, you'll get more for your business, more privacy, more guidance, and more free resources than you'll find anywhere else. For nearly 30 years, Northwest Registered Agent has helped entrepreneurs form, grow, and protect their businesses. They're the largest registered agent and LLC service in America, powered by over 1,500 corporate guides, real people who know the local laws and can help you every step of the way. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks and 10 minutes. Visit www.northwestregisteredagent.com/JLD free and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/JLD free. Michael Saylor just made an $835 million bet buying the Bitcoin dip. Right now, Bitcoin's fallen almost 40% off its October high, and the big money is buying the dip. What's your strategy? Now might be a great time to convert your IRA or 401k to Bitcoin with the help of Bit IRA. Plus, you can fund it with pre-tax funds, then continue to invest in it over time as you do any other retirement account. Bit IRA protects your assets with end-to-end insurance, highly secure storage, multi-encryption, and registered with the US government. Your IRA is fully IRS compliant. Best of all, you can trade crypto within your retirement account without incurring taxes on any buys or sells. Just go to bitira.com/JLD and request a free info guide. Once you do that and open your IRA, you'll get a free ledger. Bitcoin has proven time and time again to rebound, every cycle going from a higher low to a higher high. With Strategy's latest purchase, Michael Saylor clearly believes Bitcoin is at a discount. Time for you to get into. Go to bitira.com/JLD to open a tax-sheltered IRA in Bitcoin.
We thought about it, and then first we thought, well, is this true for all the instruments? And then we said, why is it true? And then it's true because we don't generate substantial earnings and profit, E&P. And then we thought, well, will it continue to be true? And then we thought, well, yeah, the credit's the product. This is going to be true forever. And so the business model is an interesting one. It basically is a triple tax deferred business model once you understand it. And so you sell the credit creates the amplification on the equity, and that's what actually creates the equity value. The more credit you sell, the more Bitcoin per share you create, and that's how you outperform Bitcoin. And the trick is, people have known you could do this, but the trick is to do it without credit risk. So, if I go and I borrow money for 12 months, then I've got a massive credit risk. 5-year money is a credit risk. But if you borrow the money with intention to never pay it back, there's no credit risk. How do you borrow money with intention to never pay it back? You sell preferred equity. So I would love to tell you that I just sat down and we invented this digital credit, but the truth is we stumbled upon it because we kept running into headaches or problems we wanted to solve. And we created digital credit because we started with digital capital. We started using Bitcoin as the collateral asset. And so most credit's based on a depreciating asset, and Bitcoin is appreciating asset. So if you build on top of an asset appreciating 10, 20, 30% a year, the credit risk is falling exponentially. That's the first breakthrough. The second breakthrough is it's transparent, homogeneous risk. When you have a credit instrument based on 87,000 home loans, you've got heterogeneous risk. You've got discrete risk. You might have hurricane risk. You might have fire risk. You might have political risk. Corporate credit, sovereign credit, bank credit, they all have opaque, heterogeneous, discrete risk. But on the other hand, Bitcoin's transparent, homogeneous, continuous. On our website, we update the credit model every 15 seconds. Right? You can literally go plug in the price of Bitcoin, your volatility forecast, your performance forecast, anything, and you can get the credit model to spit out in seconds. And that's a breakthrough. You cannot do that with mortgage-backed securities. You can't do it with junk bond portfolios. You can't do it with any kind of commercial real estate portfolio. The third big innovation is digital credit. In this particular case, it's digital credit is based on equity, not based on debt, right? Bank credit is bank deposits are liabilities. The bank has to give back the money. And they're the worst type of liabilities because they're overnight liabilities. You have to give back the money on demand tomorrow or today. Whereas debt is a liability that you got to give back. You got to give back the money in 1, 2, 3, 4, 5 years. The normal duration of corporate debt is like 4 years. So it's 4-year money. But preferred equity isn't a liability at all on the balance sheet. It's an asset. It's an equity instrument. It doesn't amplify the risk. It mitigates the risk. So if you've raised $10 billion of preferred equity, you're never giving it back. There's no $10 billion principal refinance risk. You've got a dividend, but the dividend is a shock absorber because literally the definition of preferred equity is the company's board of directors can't approve the dividend if it would put the company in peril. And so when you're actually funding with preferred equity, you're putting an asset on the balance sheet, a mezzanine equity asset. It mitigates the risk.
What's the second best? There is no second best.